This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
On edge, investors sell stocks hard as they recalculate risks. Among them, the growing possibility of a government shutdown in 10 days' time.
Power play. The EPA proposes tough new rules to cut greenhouse gas emissions from new coal-fired power plants. Industry says the plan relies on unproven technology and could spell the end of new plants that use one of America's most abundant resources.
And money fund fight. You probably own one. You may even think it's as safe as a bank account. Both sides tonight in a battle over proposed rules that some say could make the funds riskier, not safer. All that and more tonight on Nightly Business Report for Friday, September 20th. Good evening, everybody. I'm Tyler Matheson.
And I'm Sue Herrera. I'm in tonight for Susie Garrett. Well, you can call it Fallout Friday. A litany of events converged on Wall Street today, sending stocks sharply lower. First, the rebalancing of the Dow and the S&P 500 caused volatility as money managers had to adjust their portfolios. Second, it was quadruple witching, which is the expiration of certain options and futures contracts. Third, the growing fear that the government may be hurtling toward a shutdown at the end of the month. We'll have more on that in just a moment. And lastly, officials making comments today about when the Federal Reserve will start pulling back on its bond buying program. Spooking the markets early on was St. Louis President James Bullard, who said next month isn't out of the question.
I do think October is a live meeting. We have had press conferences at certain meetings and not at other meetings, but the chairman did say that we could, if we wanted to, arrange a press conference for the October meeting. As to whether we'll take action there or not, I don't know, but it is a live meeting and it is possible that we would move.
All in all, the Dow fell 185 points on heavy volume. The Nasdaq was off by 14, and the S&P was down by 12.
And more now on the collision course lawmakers are currently on in Washington. This morning, the Republican-controlled House passed a bill that will keep the federal government up and running past the September 30th deadline. But it wipes out funding for the Affordable Care Act, President Obama's signature legislation. House Speaker John Boehner, surrounded by supporters at the Capitol, implored the Democrat-controlled Senate to support the House bill.
Our message to the United States Senate is real simple. The American people don't want the government shut down, and they don't want Obamacare.
Yeah! Senate Majority Leader Harry Reid called the House bill dead, adding a second dead for emphasis. Meantime, President Obama was in Missouri blaming what he called a faction of the far right for trying to undermine the health care law. He said some GOP lawmakers are trying to derail him and are not focused on Americans' needs.
John Harwood joins us now from Washington with more on today's vote in the House and what it means and what's ahead for Congress. So, John, did the vote today in the House make things better or worse? And can lawmakers ever hope in reaching a deal on these very tough issues like the budget?
Well, I don't think it changed anything that we thought going into the vote today, Sue. This may be the last time that those members are going to have an opportunity to cheer like they did today because Harry Reid is right. That bill is dead in the Senate. You could say dead 3 times if you wanted to. The president would veto it even if it passed. And now what we're going to do is have the Senate act. They're going to extend government funding. And it will be on the shoulders of John Boehner to convince those members who were cheering today to pass a extension of government funding without the Obamacare provision, which he tried last week to do, couldn't do it.
You described this earlier today, John, as kabuki theater, and it certainly seemed like an apt description. Do these shutdowns, if one does happen, do they ever save money or do they end up costing taxpayers?
They cost money, Tyler, because they generate costs that have to be recouped later. We've seen this movie before. Since 1976, we've had 17 different shutdowns of the government. The emblematic one that we all remember was from 1995 when Bill Clinton and Newt Gingrich faced off. Those shutdowns cost the government around $1.4 billion. And we know that a shutdown now would be more expensive on a per-day basis. Why is that? Because in 1995, half of the government spending bills had already been passed, so only half of the government was shut down. This would be all of the government because not a single spending bill has passed both the House and Senate and been signed into law by the president.
So, John, you've been following this whole situation for so long, and you've been on the Hill for so long. What's your best guess? Are we going to see a 12th hour negotiation that avoids a shutdown, or do you think they'll let the shutdown go through?
Still possible, but I think it's unlikely, Sue. I think the likeliest event is that we do have a shutdown of some duration. Now, the shutdown itself would not be catastrophic. What would be catastrophic is if that were not followed by a decision to raise the debt limit. And so what I would expect to happen is a shutdown perhaps for a few days or a week. There'll be a lot of heat generated on the Congress. Markets will get nervous, and that shutdown then will be brought to an end. Republicans will end up folding on this and raise the debt limit at the same time. That's my best guess at this moment, but it's a highly unpredictable situation.
John Harwood, thanks very much. John reporting from Washington tonight. A problem with the Affordable Care Act's rollout of its centerpiece health insurance marketplaces. With just 10 days to go before those state and federally run exchanges are slated to open, a computer glitch is causing some havoc in the federal program. The Wall Street Journal reported today that the government's software can't reliably determine how much people need to pay for coverage and are now scrambling to fix those problems.
Home Depot now plans on using those public exchanges. The world's biggest do-it-yourself chain announced that starting October 1st, it plans to shift medical coverage for 20,000 part-time employees to those public marketplaces so workers can shop for new health care plans. The Obama administration announced some tough new limits on the amount of carbon pollution that can be generated by newly built U.S. power plants. Those rules took a big toll on shares of coal stocks today, one of the biggest sources of carbon emissions. Take a look at Alpha Natural Resources, down 6%, Arch Coal falling 5%, really losses all the way across the sector. Hampton Pearson now takes a closer look at these new climate change requirements and why some energy producers see this as a White House war on coal.
Power plants account for about a third of all greenhouse gas emissions. Over the next 12 months, the Environmental Protection Agency wants to mandate new rules using cutting-edge technology to dramatically reduce carbon dioxide emissions from new power plants. In a speech at the National Press Club, EPA Administrator Gina McCarthy says the emission standards can be achieved with homegrown technologies.
We are very confident that the carbon pollution standards we are proposing today for new power plants are both flexible and achievable. They pave a path forward for the next generation of power plants in this country.
The EPA goal is to cap carbon dioxide emissions at 1,100 pounds of CO2 per megawatt hour of power produced. That's about 40% less on average than at existing coal-fired plants. The utility industry says that standard can't be met without costly technology to capture and store carbon emissions.
They are trying to make standards based on highly speculative technology that would not even be applicable for the great majority of power plants in the U.S. today.
This coal-fired power plant in Kemper County, Mississippi, due to go online next May, could be the first one worldwide to use carbon capture and storage technology. Cost overruns have pushed the price tag to $4.7 billion, nearly $2 billion more than original projections. It's also been approved for $270 million in Energy Department grants and millions more in tax credits.
You can't look at the results of one plant, which is only 70–75% done, and apply that to an entire industry.
Environmental groups, however, say the EPA standard will create demand for that new technology. A more likely scenario, lawsuits from the utility industry over the new EPA proposed rule, as well as guidelines in the works for existing power plants a year from now. For Nightly Business Report, I'm Hampton Pearson in Washington.
And still ahead, could new rules make safe money market funds more risky? But first, a look at this week's top performing stocks on the S&P 500. Shares of BlackBerry tumbled today, and that's putting it nicely. They were even halted from trading late in the session. That's because the company pre-announced a massive second quarter loss of nearly $1 billion. and that its revenue is about half of analyst estimates. The struggling company, which has put itself up for sale, also announced plans to cut 4,500 employees. That's about 40% of its total workforce. And it's going to produce only 4 smartphones, down from its current lineup of 6. Those shares plunged after trading resumed. Look at that chart. They eventually fell 17% on the day.
Well, if you're thinking of getting a new smartphone, you probably know the newest iPhones hit the stores today. Folks were lined up around the block outside Apple stores across the U.S. and the world to get a hold of the new iPhone 5S, the one with fingerprint recognition software, and the less expensive 5C, which has a plastic backing and it comes in 5 bright colors. So we asked some people why they felt the need to get the new device today.
Today is the first day. I want to be the first one to get the iPhone 5S.
When it's Apple, people will stand online for days and days and days and days, no matter what it is.
I had an upgrade available and I figured I might as well just get it right away.
We begin tonight's Market Focus with a trio of stocks making their Wall Street debuts. First up, Rocket Fuel. Those shares lived up to their name, soaring on the first day of trading. The company, which places digital advertising for clients, priced 4 million shares at $29 apiece, the higher end of its range. Now, watch this. The stock gained 93% to close at $56.10. FireEye also having a strong debut. The company provides protection for corporations against cyber attacks. It uses modern cloud-based technologies to help businesses fight computer viruses. Demand for the offering was strong, with more shares pricing than expected and above the price range. The shares rose 80% to $36 a share. And Club Corp also gained on its first day, but just not as much as the others. The largest owner and operator of private golf and country clubs priced 18 million shares at $14 apiece. That was below the expected range. The stock did close at $14.50, up more than 3%.
And now to earnings. Darden reporting a drop in profits and its weakest sales at established restaurants in more than 3 years. The owner of the Olive Garden and Red Lobsters also lowered its sales forecast for the full year, blaming an uneven recovery, higher taxes, and some tough competition. The shares fell 7% to $45.78. AK Steel also issuing weak guidance, the steelmaker warning that falling prices could lead to a larger than expected loss this quarter. Additionally, the company said it had to reduce its steel shipments because of a mechanical failure at one of its facilities. The stock dropped 8% to finish at $4.09. The New York Times will pay a quarterly dividend for the first time in 5 years. Shareholders of record as of October 9th will receive 4 cents a share. The company is using cash raised through a number of recent divestitures to fund that dividend. New York Times closed 1% higher to $11.66. And Goodyear Tire will reinstate its quarterly dividend payment of 5 cents a share. The tire maker suspended its dividend about a decade ago in order to preserve cash. It also plans on spending up to $100 million to buy back shares of its stock. Shares of Goodyear Tire closed fractionally lower to $22.22.
Well, tens of millions of Americans keep more than $2.6 trillion in money market mutual funds. And yesterday, the Securities and Exchange Commission closed its comment period on proposed new rules aimed at making the funds safer, rules the fund industry opposes. Today, in the New York Times, financial writer Floyd Norris said the rules don't go far enough, calling them pitifully weak and inadequate. Mr. Norris joins us now, as does Brian Reed, chief economist at the Investment Company Institute, the mutual fund industry's chief trade group. Floyd, welcome. Brian, welcome to you as well. Inadequate and weak. Why do you say that, Floyd?
Well, originally, the regulators wanted to do one of two things, basically. One was to force them to admit their normal mutual funds and trade with fluctuating NAVs, net asset values. The other alternative, which they considered, was to treat them like what they really want to be treated to be, which is real banks. A bank is something that takes deposits and promises to pay you the money whatever happens to its investments. And banks, of course, have to have reserves. And around the world now, regulators are stiffening the reserve requirements for banks because we learned 5 years ago they were too weak. And yet, in this case, this is a huge banking industry that is going to get away, it appears, without having to have any reserves at all.
Brian, what about that? There are a number of people who think that, given what we did go through a few years ago, that it can't hurt to toughen up the rules a little bit. What would be wrong with holding some reserves?
You know, I think the important thing to keep in mind here is that the rules have been toughened, and we've been in a public dialogue for nearly 5 years to look at ways to further strengthen those rules to make money market funds more resilient. In terms of reserves, I'm not really sure what that means, except that, you know, money funds right now hold in their portfolios 20% of their assets that can be liquidated in a single day, and 30% that can be liquidated in a week. And so that has added a lot of resiliency, and those came about because of the 2010 reforms, which have been very effective.
You know, Floyd, one of the other things you point out is that one of the proposed rules, apart from requiring the funds to have a floating share price, it could go above or below $1 a share, is the idea of putting up charges or gates for withdrawals. And you argue that it is possible that if you did that, that could spawn a sort of a metastasis of runs on money market funds. Explain that.
Well, the theory is this is an argument that has been made by the Federal Reserve Bank presidents that under some circumstances we could see this put into effect and scare a lot of people. This proposal, what happened here was the Securities and Exchange Commission under Mary Shapiro, she wanted to impose some real rules. Unfortunately, the lobbying from the industry was so intensive that they got 3 of the 5 SEC commissioners to oppose any reform. The result was Mary left and the new SEC chairman, Mary Jo White, came in under heavy pressure from other regulators to do something, and she managed to get through the SEC proposals for these 2 rules, one of which is very weak, the other of which I think is probably misguided, because she thought, I think, that was all she could get given the political power of the industry.
Mm-hmm. Brian, does your research show that most investors understand exactly what a money market fund is? Because back in the 2008 financial crisis, a lot of people thought that it was just cash. It was just like a bank. And obviously that's not the case. Does your research show that they are more knowledgeable about that now?
You know, survey after survey shows that money market fund investors, both retail investors, households, as well as institutions, know that there's a possibility to lose money in a money market fund. And so when people argue that people don't understand that risk, and yet they also argue at the same time that they'll run when the markets become troubled, seems to be sort of like an Orwellian doublespeak to say that, well, both of these can exist at one time, when in fact investors do know and they understand. What happened in 2008, and you know, researchers have shown this, is that fundamentally the U.S. banking system was insolvent in September of 2008, and we saw a broad pullback from not only the U.S. banks but from banks globally, and money fund investors were just part of that, and they moved their money into Treasury money market funds, which were safer at that time.
Mm-hmm. Brian, thank you very much. Floyd, thank you as well. To be continued, I'm sure. Appreciate it.
Thank you.
All right, coming up, get out your pen and paper because our market monitor, a top-rated fund manager by Morningstar, has 2 large-cap tech stocks on his buy list. That's straight ahead, but first a look at the worst-performing stocks this week on the S&P 500.
Tonight's Market Monitor says he's cautiously optimistic on the stock market, but still thinks stocks are reasonably attractive. He's Charlie Bobrinskroy, Vice Chairman of Ariel Investments and Portfolio Manager of the Ariel Funds. I'm going to call you Charlie because your last name is a little long for me, but welcome nonetheless.
Thanks for having me.
We heard earlier today, both from Warren Buffett and from Carl Icahn, who said that they thought the stock market, broadly speaking, was fully valued and that they were having a hard time finding things to buy. Do you share that view?
I think the word he used was fairly valued, which is different from fully valued. I mean, I think we would agree with Warren in that sometimes the market is overpriced, sometimes it's clearly underpriced. Right now, it's in the middle. So we would expect to get normal returns on the stock market, maybe high single digits, not spectacular returns, but reasonable returns.
You know, there's been a lot of volatility in the market this week, partly because of the Fed, but you're watching another part of the market, the muni bonds, and you say that there could be trouble brewing there.
Yeah, so while we think that the stock market is fairly valued, and there are no great opportunities, not massive risks, the muni market is where we do see danger. And we think there are things like the state of Illinois, which frankly my home state is broke right now. They have over $100 billion of underfunded pensions. That doesn't even count the city of Chicago and Cook County. And there are going to be big problems in the muni bond world. Puerto Rico, I could keep going on. And I think the investors in that market think that the federal government is going to bail them out because they bailed out GM. But I don't think that's going to happen. I think there's going to be real losses in the muni bond
Let's get to a couple of your stock picks, two companies that are hardly broke, but maybe a little bit unloved. Let's begin with IBM and Microsoft. Why do you like them both?
Because so many people don't like them. They're very much out of favor and very cheap stocks, trading for about 11 times forward earnings, both of them. In a market that's about 14. People think that Microsoft is going away, and it is not. Microsoft has a wonderful cloud business where they provide services to people as big as Oracle. That try and write an email without using Word. Send a Word document with something other than Word, and the person on the other side won't be able to open it. So they still have a great business, and they have a ton of cash on the balance sheet, almost $72 billion of cash. The other one we love is IBM. IBM is in the middle of big data. Watson, the famous computer that beat Jeopardy, is fabulous at mining data, and IBM is on the cutting edge of that. That stock is also only at about 11, 12 times earnings. They had one bad quarter last quarter, but we think their business is recovering.
Let's move on to Western Union, because you say they're at the forefront of digital money transfer.
Absolutely are. They have the highest margins in the business. People sometimes say, oh, people in the future will be able to transfer money on their iPhone. Well, if you're an immigrant worker from Mexico, the problem in sending money back to Mexico is not that the phone couldn't do it, it's that you don't have the bank account in Chicago or in Dallas to do it. And the limitations on sending money aren't technology, they're regulatory. The U.S. government has very strict controls on sending money across borders, and Western Union is very well set up to handle that. So we believe it's a great company with good growth, trading again at about 11, 12 times earnings.
We're going to have to leave it there, Charlie. We appreciate it. Do you have any disclosures? Do you own? I assume your funds or the company owns those stocks that you mentioned, but maybe you don't.
We own all three, and then I personally own all three. We do no investment banking business with any of them.
Charlie, thank you very much. Charlie Bobinskoy of Ariel Investments, portfolio manager of the Ariel Focus Fund, which is up something like 30%, Sue, thus far this year.
Very good performance. A low-cost airline is grounding half of its fleet in order to conduct some safety checks. Las Vegas-based Allegiant Airlines took as many as 30 of its MD-80 jets out of service today in order to inspect the plane's emergency slides. The devices failed to deploy earlier this week on board one of those jets after a smoke condition was reported in the cabin at the Las Vegas airport.
And finally tonight, one of the world's top cut-rate airlines is changing its tune. Ireland's Ryanair offers cheap tickets to cities all over Europe, but the carrier may be best known for charging passengers to use the bathroom or to stand up during flights. Now it says it has to start treating its customers better. Today, the airline's chief executive told shareholders the company has to improve how it treats passengers and how it handles complaints so they don't take their business to the competition.
Imagine that.
Imagine that, putting the customer first.
That's right. What a novel concept.
Yes, wow.
I think they'll be successful with that.
Yes, yes.
Thanks, Ty. It's been a great week.
Great week.
Susie's back on Tuesday. I'll be here on Monday night, but she's back on Tuesday. And that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great weekend, everybody, and we'll hope to see you back here on Monday.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Tyler Matheson with a nightly business report news brief. Stocks fell hard today on growing worries about a government shutdown and comments from a Federal Reserve official that the bank could begin tapering its stimulus plans next month. The Dow today off 185 points. NASDAQ down by 14. The S&P 500 lost 12. BlackBerry shares plunged after warning of massive losses. It is also laying off 40% of its staff. And tough new carbon pollution limits on new power plants from the EPA, sending coal stocks lower. And the House passed a bill that will keep the federal government open past the September 30th deadline, but it wipes out funding for the Affordable Care Act. Target plans to take on 70,000 temporary workers this holiday season. That's fewer than last year. And tune in to Nightly Business Report right here on your public television station.